Thank you for coming, Neville.
Thanks for having me.
Well, this is interesting, isn't it?
It is.
You ran away from the big mark way of doing things to create your own. But what about methodology? Is it the same?
Exactly the same. So the reason why we used milk was just to try and get a product that is homogeneous or the same across the continent. So it wasn't some big scientific experiment that we used, but was trying to find something that we can easily compare across jurisdictions. So we sort of landed on milk.
Could you have landed on tomatoes?
We could have used the tomato index. Maybe there's an idea.
Okay, so what did you find?
So the idea behind that obviously was to get a sense of over and undervaluation.
Yeah.
And several things that we can take away from there. Nigeria still remains extremely overvalued in terms of the Naira. So in terms of the 9 countries that we ranked, and we could have done a lot more. We saw that the Naira was extremely overvalued, and that is intuitive. I mean, we know that the Naira, tends to remain fairly stable. The authorities there, prefer a very stable currency. So that means, the value that is at now, call it 300 Naira to the dollar, should be significantly weaker than that by
What's significantly weaker, Neville? Sorry, I'm running over my time.
North of 400.
Oh, wow.
So that's pretty much what what our methodology is saying. But that's not to say that it's going to happen tomorrow.
Yes, of course.
I think what this is just a simple point of departure to say, well, how big is the chasm between what should be versus what is?
Yeah.
And this is, the conversation starter that we have. So bear in mind, there are many ways of skinning a cat.
100%.
And this is one way of doing it.
Yeah, give me the top 5.
So we have Nigeria, or rather the West African countries reflecting extreme overvaluations. So the likes of, the Ghanaian cedi and the Nigerian naira sort of topping the overvaluation. And like you mentioned, on the opposite end of the spectrum, we've got the likes of, the Botswana Pula, we've got Kenyan shilling and the Zambian Kwacha, sort of moving in a sense towards the right direction in terms of fairly valued, but still some distance towards there. So that's where the sort of spectrum of currency sort of sits.
Yeah. Is there any link between those currencies that are managed and those that are allowed a free float, better reflecting the values of what those currencies ought to be?
I think intuitively this is what we're seeing with the index. So we know that
the market is better, the market is efficient,
exactly.
It points to the right.
It tells you what it should be. So then, some of the ramifications for that are quite interesting, because we know that in the worst of times, I mean, rewind a few years ago with the Nigerian naira, with the naira, when oil prices collapsed, and we eventually saw the naira being devalued because the pressure was extremely too much for them to maintain at that level. So again, if we get into that phase, over the next coming years, we may very well get to that stage where they might need to devalue because they're extremely managed in a sense.
What about the interest rate link? Because often when we talk about the rand and how it moves on a day-to-day basis, economic fundamentals most of the times are out of the window. It's more about whether the Americans are cutting and whether the risk is on or the risk is off. Does it apply to African currencies?
Well, we're starting to see a lot more correlation with the developed world, particularly for economies such as Egypt and Nigeria, where the financial markets are relatively deep and well traded by foreigners. So we tend to see that relationship quite closely. But again, it's some of the central banks would allow some weakening to some degree, but never a full-blown sort of devaluation because of the inflationary effects that it might have. So we tend to see that maybe on a day-to-day basis, the correlation between, what President Trump may be tweeting relative to what we see on the currencies.
Yeah. In Africa, of course, there's always this issue about, data and its credibility and integrity. Does it apply to this? How do you guys skin that out of it?
Well, we do try as best as we can. I mean, we rely on a few sources to try and get a sense of whether, prices that we're seeing or using in our methodology actually correlate to what we're seeing on the ground. So we do try and clean it up. But again, it's always an issue to actually get the most accurate data at that particular point in time. So it's a game of approximations.
Yeah, I think we should put it up on the screen and then it will be tick whether we see the tomato price or the milk price go up or
that's a fantastic idea, actually.
On a day-to-day basis, I think we can have a better idea.
Exactly.
I wanted to ask if there are any lessons for governments to take out of this. I mean, how could they use this data? And as we say, data is a problem in Africa. Is there any way they could use this data that you guys are gathering through this milk index?
Certainly. I think one of the things that we can take away there is, if your currency is extremely overvalued and, we then go into sort of a risk-off period, for a prolonged period of time, and the markets need to adjust. The pain that you can take in that particular environment can be extremely huge and painful. So if your currency is fairly valued or freely floating, say the South African rand, we know that, the adjustments will be small relative to sort of north of 150% that we're seeing. So when it comes, it hits you really, really hard. So I think economic theory would tell you that, to let it float is a better sort of strategy in the long term than to try and manage it, because you can only do that for so long.
Yeah. So you obviously have done a lot of work around this. So I wanted to ask you while you're here about which markets, currency markets in Africa are, I didn't want to say efficient, I wanted to say more like which are more liquid. When you look at across the African continent. Of course, we've got quite a lot, don't we?
Yeah, we do.
Yeah.
I would say right now, where investors tend to play, and it's relatively easy to get in and out, I would say Nigeria is obviously fairly huge in terms of depth of the financial markets there.
Sure.
Egypt is fairly huge. South Africa, we won't even mention.
Yeah.
And then a few other countries like Kenya as well, yes.
Yeah.
And then Morocco as well tends to feature on the radar in terms of depth of financial markets.
Yeah. And in terms of perhaps measures that could be taken by authorities to try to improve market efficiencies within the currency space, when you, we're generalizing obviously across the continent. Some ideas.
Well, I would say regulation is a key thing. What we're seeing from our clients, particularly offshore, they want to know, what exactly is going to be coming down the road in terms of, regulation. You don't want to wake up and suddenly, you've changed the market structure or where you can trade or what you can't do. Yes. So that tends to be a very huge thing for investors. And I think also improving, domestic saving pools like your pension funds, etc., to be able to participate in financial markets as well as attracting foreign capital. I think that goes a long way in terms of ensuring that there's proper price discovery within the markets. Yeah,
and also the opportunity for reform is big.
The opportunity for reform is massive. I mean, we are in this environment where, rates in the developed markets are going, close to zero. So there's an opportunity for investors to look elsewhere. And Africa is the so-called last frontier of that. But we need to get the right things right, i.e. regulation and predictability.
And part of that regulation is obviously your legal environment as well, the independence of the courts and ability to adjudicate. I've almost forgot to ask you about Zimbabwe.
Yes.
Where is that Zimbabwe dollar or RTGS dollar that morphed into the Zimbabwe dollar? Overvalued, undervalued, where is it?
I think at this stage we're sitting at a bit overvalued by several measures, not only this one, but also the differential between
I don't want you to
the
feed the black market in Zimbabwe.
No, but I'll certainly say that is a point of departure in terms of assessing fair value. What is the difference between where the interbank market is and where the power market is? I think that is your first and immediate understanding of whether a currency is fairly valued. And we see a small differential at the moment, so there is room for upward adjustments for the interbank rate.
Oh, so you're saying a small differential rather than a big gap between the real value and what the authorities are actually charging? Because I know the authorities are trying to get as much foreign currency as they can into the economy, and therefore have sort of set this exchange rate a little higher.
Well, we're starting to see that there is some free float in the interbank market. I mean, it's not moving as high as it should be because the flows are almost one way at this stage, i.e. people wanting to buy dollars and not necessarily sell. So I think the exchange rate could be much higher there. But I think as soon as we close the differential between the interbank and the power market rate, then we can start talking about, more and better fundamentals or measures of the currency.
Will it work, Neville? Because we know they've got no import cover to talk about given the challenges of the past.
Well, I think it could work if we obviously improve the productivity of the economy and also improve export revenues. Right now, we're sitting with an economy that's not producing much, so the inflows of FX is not as high as it should be. So I'd say that from a political willingness, the sense that I get is that the powers that be seem to be backing this reform agenda. To what degree remains a debate, but at least there is a movement in the right direction relative to what we've seen in the last couple of years.
Yeah, no, it does appear to be the case. Actually, I want to point you to an interview I did with George Gwamatanga, the permanent finance secretary. It was interesting and illustrative, I think, in terms of the political backing that the government appears to be giving it. Let's see if that works. Neville Mandimika is an economist and fixed income strategist at RMB.